That financial services group swung to profit, with headline earnings per share increasing 176% to 19 cents in the 6 months to June. Revenue from continuing operations increased by 12% to 45 million rand. So joining us now to unpack those numbers is Butana Khoza, who is MD at Vunani. Morning, Butana. Fair to say it's a turnaround. I was looking at your previous numbers, December 2010 to December 2011. Your turnover actually dropped there from 195 million to 106. You've had a negative return for investors since early 2008, but there's a turnaround here from loss to profit now.
Indeed, and we're particularly encouraged by that particular turnaround. I think the legacy issues in Vunani are well documented, but we've worked hard to try and reverse the situation. We've restructured debt, we've sold underperforming assets, we've tried to grow our organic or operating businesses, and I think the signs are starting to come through. I think it's probably a reward for a lot of hard work done, but the key challenge is obviously sustaining that going forward.
I'll ask Gerard for his interest in the share in a moment. Restructure is a word that's come up a lot. Restructure of the business, restructure of the debt, and you said the legacy issues are well known, but perhaps by way of summarising, you could say, what have you done in the restructuring?
Well, one of the big things that was a particular challenge is we had a lot of geared investment, a large exposure to the infrastructure space or construction companies in bricks and construction, in project management. And I think the challenges that were seen in those particular companies are pretty also well documented. You talk about Basil Reed, we were invested in that particular company through an entity called TWP, which was reversed into Basil Reed. And so when those particular investments went through a bit of a rough time, and we had gearing against that, what happened is that we obviously had high finance costs without the commensurate movement in share prices. And certainly one of the challenges is that if they're not dividend paying, you have a huge roll-up of debt. It then warrants that you look at how you deal with that particular situation, you restructure your debt, and to the extent that you can unlock some of those positions, that's what you try and do. But if you look at 2011, even though our finance costs were still very high, what we did was that we actually redeemed quite a lot of debt. But I think one of the most fundamental restructuring situations we did was we had developed our own investment property portfolio, which was geared as well. But what we did is we actually listed that on the stock exchange in August 2011. And we still retain a strong influence in that. We have shareholding in it, but we also have the management contract over that investment property portfolio. I'm
going to pause there, and we want to come back to the restructuring. But Gerard, your thoughts on what Butana's been saying?
Yes, I think it must be looking much better now. If I can ask Butana, the balance sheet, your debt to equity ratio now, roughly, is that come down?
No, it has come down quite substantially, and our anticipation is that by year end it should have actually improved even significantly. It's always been our target to ensure that our debt and the requisite finance costs associated with it are serviceable from with our own sort of operating profits. We envisage that by year end we'll have very, very little debt in Vunani. It's really the last remnants that we're dealing with, and hopefully we'll be able to announce to the market, they're dealing with that last sort of portion.
So no rights issue?
No rights issue anticipated. It's really just dealing with it from within existing resources.
And how do you see the markets, the financial markets especially? Do you think that we will get a very good growth there, or do you still see a flat income stream from the financial market side?
Yeah, look, I think there are various aspects to financial markets. I think certainly on the retail side, I think some of the issues are starting to come through. Obviously, an indebted consumer. There's been talk about sort of unsecured lending, sort of driving a lot of the demand, and obviously eyebrows are now starting to be raised about whether that is the most appropriate way of actually stimulating consumer expenditure.
You're not
so-
invested in unsecured lending.
No.
Let's look at the prospects there, Butana. You mentioned infrastructure.
Sure.
And of course, if you were in infrastructure between, say, 2004 and 2008, you could have made a great deal of money.
Sure.
And the build up to the 2010 World Cup.
Yeah.
You say we are well positioned to take advantage of government's mooted infrastructure development. Now, there are a lot of people who say, well, either that's not going to happen, either because government's just too slow, or because the actual reality on the ground is that we haven't got the capacity to do it. So it sounds a little, given what you said earlier, that you're taking the same risk again.
Well, I think the risk is slightly different this time, because what we do have quite a strong advisory business that is quite active in the state-owned enterprise and government space. So when we talk about government infrastructure spend, in fact, the lack of capacity is to our advantage.
So you
Because
mean the longer it takes to get to the actual spending, the more you're busy helping advise and so on?
Indeed. I think it's about unlocking that particular capacity through providing advice and capacity to government departments that may, or state-owned enterprises, or municipalities that may not have the capacity to do so. So from a business point of view, that's actually good for us. You talk about it being slow. I think we certainly felt the impact of that in the beginning of this year. You know, where you need government to actually be raising money and spending that particular money. And if you're an advisory base, if you're in the business of actually doing data origination and advice in that particular area, and nothing is happening when it's not coming on stream fast enough, then it's a problem.
Gerard, it sounds a bit like the lawyers, you know. They don't want anything to happen. They want to keep it going, the talking
But
for as
there's a
long as
lot
possible.
less risk in it.
Of course.
I mean, in advice, it doesn't cost you fixed assets. You don't have to buy graders and hope you get the contract. So it's a lot less risk in that type of business, which I think is positive.
Yeah. And then you just to finally, Butana, you talk about slow economic growth, which everyone agrees is an issue. You say it will impact on your stockbroking and corporate finance business, but you're comfortable that that'll be offset by the fund management and the property business. So that sounds like you've got a nice mix when one's not performing, the other's will.
Indeed. And you know, it goes in swings and roundabouts. Some of the things might pick up during the course. We're not saying, you know, that there'll be no activity in corporate finance. We're just saying timing is an issue. But nevertheless, I think if you look at fund management, obviously if you're growing your funds under management, you get kind of a fixed rate to manage that particular money. It's less of a volatile sort of business, unless, of course, you know, the markets are not performing, then that volatility does come through. But nevertheless, I think, yeah, our business is a diversified financial services business. And so to the extent that there's that diversification within the business as a whole, we think that the prospect of having sustained operating profits, I think, are good.